Following the recent Labour general election victory, what are we going to see from a new government? Relatively very little initially, as it's going to take some time for their policies to work its way through the system, and I don't expect to see any Labour government initiatives showing or having any impact in the property market until at least 2026. The good news is that mortgage rates are finally reducing costs for UK borrowers. As the market looks ahead to an expected late summer cut to interest rates by the Bank of England, we are starting to see swap rates adjust ever so slightly. They are still higher than what they were in January of this year, and as a result, mortgage rates are still more expensive than what they were in January. Swap rates were 3.5% for 5-year money. They're presently 3.81%, so we still have some distance to go to get back to where we were at the start of the year. Several lenders, from the Halifax to Santander, TSB, Virgin Money, Barclays and the Co-op, have all dropped their borrowing rates in the past 2 weeks. Barclays, which started the current wave of cuts last month, now have a 5-year fixed rate for some customers as low as 4.08% and 2-year deals at 4.49%. As a comparison, in January, the best and cheapest money were with rates at 3.89% for 5-year fixed. Now, it is possible that the cheaper rates could soon dip below 4% again, a threshold that would encourage some would-be borrowers. The much anticipated wave of rate cuts has gathered pace, and we've seen some of the biggest lenders in this country lowering their rates to win competition. This is largely due to lender price war competition in a low volume transaction market for the lender to win that actual business. The recent spate of mortgage rate cuts comes as markets anticipate the Bank of England will finally cut interest rates in August or September from their 16-year high of 5.25%. Inflation data for June released on Wednesday showed annual price increases were steady at 2%, which is the central bank's target level, although service inflation remained stronger than anticipated at 5.7%. This makes the Bank of England base rate cut, in my opinion, a close call at 50-50 if they decide to go now or later in the year. As we get closer to the likely base rate cut, stability in the economy is exactly what we need to keep plans on course. Obviously, the IT global surge that has caused problems recently is unhelpful, but if it's solved quickly, then hopefully we will see mortgage rates to fall back later in the year. The 5-year SONIA swap rates used by UK lenders to price loans is now at 3.8%, dropping from 3.91% a month ago. Further declines in the cost of loans is good news for the property market, which has been largely idle since rates spiked higher in late 2022. Once base rates start to fall, which could well be the trigger point for people to make decisions on both purchases and new fixed rates. A mortgage rate starting with a 3 feels a little more comfortable, but we are not there yet. Affordability constraints for buyers facing higher interest rates will probably hamper the new Labour government's ambition for a boom in house building, since commercial builders will limit their output based on the rate of sales. As ever, your circumstances are unique, and every single opportunity will be explored by our team of experts to assist you when you're looking to make a purchase or review what options are available. And as ever, please remember to like and subscribe. As always, seek professional advice, and we'll always be here to help. Thank you.